Hey guys, what is up? Welcome back to my channel. It felt like yesterday that I've just made the 500 sub special Q&A video, and now I can't believe myself, we have just crossed the 1000 subscribers mark. A few videos really took off from this channel, notably the Stash Away series as well as the video that I've made comparing 7 brokers that you can use to buy US stocks, and I'm really grateful for that. Let me know in the comment section down below which video that I've made that you guys really like, and that will give me a better indication of what you guys like and don't like. So back to today's topic. A while ago I asked you on Instagram to ask me anything, and you guys have been really kind enough to send in a lot of questions. And before I even begin, I just want to say that I'm really thankful for that, and keep the interactions coming. You guys know I never fail to read and reply to every single one of your comments, so cheers to that. Help me smack the like button down below, and with all of that said, let's start answering your questions. First question we have from Spammaterial: how to read annual reports for dummies. I've actually made a video covering how to read an annual report, and I'll leave it on the link on the top right corner, so feel free to go check it out. It's a little bit old, but the focus is still the same on the 3 things that I would like to focus on. Firstly, the chairman's statement, and that can be in the form of prospect or anything that you may have missed. And the second is in the form of the 5 years financial summary, and that can come in the form of revenue growth, gross margin growth, EBITDA growth, net income growth, and whatnot. And the third thing that I always look at is the financial statements, and that comes in the 3 forms. First, the P&L or the profit and loss statement. So look at it from the top to the bottom. Look at the revenue, look at the gross margin, look at the operational cost, and I personally like to look at the research and development cost, and if it's increasing, usually it means a good thing that the company is reinvesting into itself. And lastly, we look at the bottom line, which is the net profit, and that is the last thing that I look at because it is not a cash item, right? So next we have the balance sheet, and that is where we look at the assets, liabilities, and shareholders' equities. So for that, you can focus on the cash and cash equivalent in the assets. Look at the short-term liabilities, look at the short-term assets. Those can give you a few quick ratios, debt to equity ratios that can give you an idea of how the company is doing financially. And the last thing I look at is the cash flow statement, and it comes in the form of operational cash flow, investing cash flow, as well as financing cash flow. So if the operational cash flow is increasing, that's a good thing. And looking at the investing cash flow, usually I would like to see what the company is spending its cash on, whether is it investing in more acquisitions or buying more equipments and assets. So that is a good thing as well. So lastly, we look at the cash flow from financing activities, and companies usually leverage on debt to finance their projects. So that is a very usual thing, and make sure that the company is not taking on too much new debt, and because too much debt will actually hinder their future cash flow because they have to pay more financing costs. And I'm looking at you, AirAsia. And next we have question from brandonyapyenzy: invest in company on their all-time high, example Square, for potential growth, or wait for pullback. So as a matter of fact, for companies that I would like to keep as a long hold, I will never wait for the share price to pull back, because time in the market beats timing the market. And if it concerns you, start a small position and keep some extra cash to dollar cost average down. And I usually follow the thumb rule of every 10%. And I just want to say that Square is a different type of animal, and it is not just a normal financial services company, because most of its increase in 2020 has been fueled by Bitcoin investments. If you are really unsure whether or not you should invest now at its all-time high or wait for a pullback, then one tip that I always use is to compare it with its peer in terms of market cap. If you look at Square, its current market cap is around $100 billion versus its peer, say Visa, which is around 500 billion market cap, and MasterCard, which is around 340 billion market cap. So that will give you an indication whether Square has a room for growth or not. And I mean, just look at Tesla. It's been all-time high, and people have been arguing about it ever since it was $700 pre-split, and now what we have today, Tesla is around $3,300 pre-split. So there you go. If you choose to wait for Tesla to dip, I am afraid that you will probably miss out this investment. So you can apply this method for any hype stocks with good fundamentals, and not for penny stocks or any small to mid cap companies. And be extra wary because their share price in 2020 has been largely fueled by the Fed's pumping money as well as over optimism. Alright, so let's look at the next question from yunayyx. yunayyx, thoughts on Bitcoin. Alright, my opinion really doesn't matter, but since you asked, allow me to share with you my personal take on Bitcoin as well as cryptocurrencies in general. I guess by now everyone should know that what Bitcoins and cryptocurrencies are in general, how they are a store of value as well as their growth is mainly on the fall of the fiat currency and whatnot, right? But let me share with you my personal opinion why I would not go all in with Bitcoin. Well, first of all, when you say that Bitcoin is a store of value, do you really want a banknote in your wallet that can be $10 today and be $12 tomorrow, or maybe $5 3 days later, and 1 month down the road it is $50, and 3 months down the road it is $2? So to me, it is not a very good store of value due to its price fluctuations. Next, the fall of fiat currency. With all the big countries such as China and Japan having so much cash reserve with the US, do you really think that the central bank will let the fiat currency fall? What makes you think that the dollar will continue to deflate after COVID is contained? Thirdly, government intervention. I guess by now everyone knows that Bitcoin is a decentralized financial system that is not regulated by the central government. Yes, true, that may be correct, but the government can still intervene in the use cases of the Bitcoin and cryptocurrencies in general. Just think about what if the government chooses to impose regulations on the use cases such as online payments and blocking every online payments from using Bitcoin or any other exchange or custodian wallets that allows trading of cryptocurrencies. Now that itself is enough to cause some frenzy and panic selling already, so that is also something that is worth considering as well. And number 4 is the blockchain technology. Blockchain technology or IT is not within my circle of competency, and as a thumb rule of investing, it is always better to invest in something that you can understand or you can track. As of early 2020, there are more than 2,000 cryptocurrencies in this world, and all of them are based on technology. And what makes you think that if technology can create Bitcoin or cryptocurrencies, why can't technology or hackers destroy all those cryptocurrencies as well? And for what it's worth, it is a non-regulated decentralized currency, so the risk is always there. Anyways, my point is it's okay to invest in cryptocurrencies as long as you are aware that there are real apparent risks inherent within the Bitcoin and other cryptocurrencies. I will probably just buy a little just for the sake of learning and not go full force with it. But if you are still contemplating whether or not you should put your money and invest into cryptocurrencies, let me just ask you this one thing. Are you convicted enough to dollar cost average down if Bitcoin chooses to dive 30 or 40% next month? If your answer is yes, then I think you have the conviction to go for a long-term investment. But if the answer is no, it is okay to pass on this opportunity because there are more investment vehicles out there. Remember, no investment in this world has guaranteed return. Even the greatest company out there can easily be disrupted and fall down to ashes. So that is something that is worth pondering about. Next, we have from Sean, Bitcoin or Ethereum or both? Why? Well, to be honest with you, I don't know. I don't have an answer for you. But from my research, Bitcoin and Ethereum have two different fundamentals. Bitcoin started off as a digital currency, whereas Ethereum started off to cater for the software developers for their platforms, and later on converted into a digital currency due to a spillover effect by the Bitcoin. Again, I'm no expert in cryptocurrencies, but I always follow the thumb rule. If you can't choose between two, why not both? Like if you walk into a coffee shop and the coffee uncle asks you, boy, you want coffee or you want tea? If you can't decide, why not order one small cup of coffee and one small cup of tea? Problem solved, right? And if you can't afford both of them, go for the more expensive one, because things are more expensive for a reason. Next, we have question from Unkerjack. Dividend stocks to have. I'm like the last person you want to ask when it comes to dividend stocks. And I've just made a video last week stating why I'm liquidating all of my dividend stocks because I'm focusing solely on growth stocks right now. But the main reason why I'm quitting dividend stocks is because the return is always at the mid to high single digit at best, and that is a little bit too low for me. I know people always think that dividend investing is safer, but to be honest, safe is not safe in the stock market. I personally prefer for the company not to pay dividend and to take the cash and profits to reinvest into their business, and to me that is a better way to grow my investments capital. So yeah, that's that. Next, we have question from BX. How about 10 companies that could potentially last 1000 years? Well, 1,000 years is a bit too far-fetched, so why not we do 100 years. So 10 companies that I think that could potentially last 100 years, and it usually must be a large but nimble company, and best if it is technology based so that it can't be easily be replaced. And that will be Google, Apple, Amazon, Tesla, Alibaba, Tencent, Square, Coca-Cola, Johnson & Johnson, and lastly maybe SpaceX. So yeah, that's the time companies that I think will last for 100 years. Next, we have question from Felicia. How to differentiate between facts versus noise during research? So that is a very good question to begin with. When it comes to researching, whether be it for my company or for my own investment thesis, there are a few things that I always look at. So the few thumb rules are always trust in annual reports, and even the quarterly reports which are unaudited cannot be trusted. Next, we focus on the reliable news sources such as Bloomberg, Reuters, and Wall Street Journal and whatnot. Next, we can also trust in company announcements as well as government reports, whether be it in the form of forecasts or outlooks. And lastly, we can also rely on the rating agency's report, and that can be from Moody's, Fitch, or S&P. And for the next thumb rule is to always take it with a grain of salt when it comes to social media, and that by far is the worst. Next, independent blog writers and YouTubers, take it with a grain of salt. Thirdly, analyst report, and that can be in the form of buy or sell calls. That can also be inaccurate. And basically anything that has no official backings whatsoever, you should also always take those with a grain of salt. So if you follow those thumb rules that I've just mentioned, you should be able to block out all of those noises and focus on the facts when it comes to your investment research. And second question from Felicia. How to analyze stocks, and I've actually just made a video to show you how I analyze my stocks just 2 weeks ago, so I'll leave the link on the top right corner, so feel free to go and check it out. So basically I like to focus on a few things: business modes, fundamental analysis, and that can be in the form of quantitative and qualitative analysis. And once you go through all those analyses, you can basically filter out all those donkey companies with huge promises and no fundamentals backing them. Okay, next we have from Patrick. Show your portfolio. And for those of you who are interested to follow my portfolio updates, feel free to follow me on Instagram, and you guys know that I always update my portfolio every 2 or 3 weeks. Alright, I hope that helps. Next, we have question from Shreee. Hi Ziet, maybe basic technical analysis. Well, I just gotta put this disclaimer. I'm not a professional trader, and I only use those technical analysis as a guide for my investments. My suggestion for you is to start with a few basics such as the price action, Bollinger Band, Fibonacci retracements, relative strength index, RSI, as well as the stochastic oscillator. And using RSI and stochastic, you can plot for things like bullish divergence or bearish divergence. Also, if I may suggest you to follow trading channels such as Rainer Teo and Trading 212. They really break down all those complex indicators to simple and digestible versions, and I'm sure you will be able to enjoy and appreciate technical analysis by learning from them. Next, we have question from Sivasathish. Anything boy? Your thoughts on FIRE and multiple sources of active and passive income? Well, thank you Siva. FIRE, financial independence and retire early. I personally like the FI portion, but not so much for the retire early, because retirement is not something that I look forward to. And even if I retire, that will come in the form of retire from working for someone else, and I will start my own business to work for myself. And to achieve that, currently I am investing pretty aggressively, about 40% of my income, but that's just me. And to me, financial independence is doing things that we like without having to worry about financial issues at all. And given the right circumstances, I would prefer to run my own business that can generate cash for me even after I'm retired. And I'm the type that can't sit down quietly and do nothing. Even if I'm really old, I would like to have something that I can occupy my mind and my brain capacity. So before I started my YouTube channel, I only had one active income from my daily job, as well as one passive income, if you call it a passive income, from my investments. And after having all of this YouTube thing, I've diversified my incomes to include side hustle commissions and whatnot, and maybe one day YouTube AdSense revenue. I am still working very hard to increase my secondary income, as you can see from my YouTube channel as well as from my Instagram page. And my goal is always for my secondary income to exceed my primary income. So to summarize, we should always look for ways to diversify our income streams. And with internet nowadays, opportunities is everywhere. I mean, you can start a blog, YouTube channel, do some freelance gigs, sell stuffs online and whatnot. The possibilities are endless. And if any of you are interested to start your very own YouTube channel, feel free to DM me and I'm more than happy to help you out. I might make one separate video to talk about all my income streams, so stay tuned to that video, and I hope that I've answered your questions. And next we have question from Zach. View on getting a job in the financial sector in Malaysia. Well, just to begin with, in case you misunderstood, I am not from the financial industry. I'm a business analyst working in the power industry and not the finance industry, if you get what I mean. If you want to enter the traditional banking industry, a degree in economics or finance is usually suffice because the entry threshold is not really that high. And if you want to enter the investment banking industry, then you will need a few years of experience within the finance industry, or you will need to start with a CFA certification, and CFA stands for Chartered Financial Analyst. But with all of that said, even if you are from the IT, engineering or whatever industry, you will still have a shot to work within the investment banking industry, and I will leave that up for you to explore. They say that engineers are the most versatile profession in this world, and I myself as an engineer graduate work in the business and commercial sector. So if I can do that, you too can do the same. So I hope I answered your questions. Next we have question from Any Name Will Do. Which two China ETF should I buy and hold for the next 20 years? Well, I can't give you any investment advice, but if you were to ask me to buy and hold any China ETF, that would be KWEB and CHIQ. KWEB is the Crane Shares CSI China Internet ETF, focusing on internet and tech companies, and CHIQ is the Global X MSCI China Consumer Discretionary ETF, focusing on consumer discretionary. And with the ever increasing spending power of the Chinese nation, plus the booming tech giant companies such as Alibaba, Tencent, JD.com and Pinduoduo, I think these two ETF will have a very significant headroom for growth. And his next question, any one app or resources I can track all of my portfolio, shares, funds, bond, crypto and etc. Well, correct me if I'm wrong, there are no one portfolio tracker that you can track everything in under one roof. And even if they do, they are probably not optimized, because we are talking about your local credit card usage, local stocks, overseas stocks and cryptos and whatnot, right? So it is a bit hard to streamline everything in one place. And if you really want to track everything under one roof, then I suggest you to use Google Online Spreadsheet, where you can plug in all the API data and track them live. And that way you can record your monthly expenses and whatnot and track your portfolio movement. I personally separate my investments and personal finance so that I don't get them mixed up emotionally. And the last one for the day is from Unkerjack and chuaaa. Giveaway lah. Give away 1,000 ringgit. I will think of something to give away once I monetize my YouTube somewhere before June, I promise. So let's see what kind of giveaway that I can organize. So yeah, that is all for the 1,000 sub special Q&A. I hope I've answered your questions to your satisfaction. Leave a comment down below and let me know if you have any video suggestion. I'm more than happy to interact with you. Once again, thank you very much for the 1,000 subscribers. Cheers to more, and as usual, stay safe, stay invested, and I will see you in the next one.